Okay, so tier list time. We're going to be doing Forex strategies this time. Now, I've done a few. I've done one on sort of the mistakes you can make as a Forex trader, but today I thought I would just rip it and go in with strategies. Now, by no means am I insulting your strategy if I put it in a bad one. This is just my personal experience with them, so please don't be offended. These are all the strategies I've traded over the last, 5.5 years. And yeah, we're going to do it now. So these are the different strategies that I've sort of traded or tried or used, and my experience with them. We have the categories ka-ching. It's solid, it works, it makes money. It's okay, but you will not retire. I would find something else, and just straight buns. Those are the 5 categories that we've gone with. Based on my experience with the strategies and what I think about them. So yeah, I think we get started. So it's kind of hard to see them, but obviously I'll explain them as I go. So the first one down here is Wyckoff. So if I just zoom in a little bit more, there we go. So this is Wyckoff. Now, where would I put Wyckoff? I've traded it for a while. I spent a lot of time trying to learn it. And for me, it's a tricky one because it does work, but as a Forex strategy, how good do I think it is? Well, there's a few, pros and cons. I think the first thing that's good about it is it does work, it does happen. It's how you can identify accumulation and distribution within the market cycles. That is true. Where it kind of falls, in my opinion, is spotting it and actually being able to, I guess, make money off it and actually trade. And so for that reason, I'm going to put it in I would find something else. And that is kind of the main reason why I would, is because of the fact that it does work, but to actually trade it is hard. If you miss the spring or whatever it was called, I think it is the SPS or something. If you miss that, you have to then wait for the next market cycle to get in again, unless you drop to an even lower time frame and try and find like a low time frame Wyckoff. But realistically, that's obviously less likely to hold. So it's tricky. You miss it, you don't get a trade for a while. You can't really enter any other way if you purely trade Wyckoff. And so for me, I would find something else. I don't think it's that good. The next one is divergence. Now, for those who may or may not know what that is, that's essentially the idea that in an uptrend, if you're in an uptrend and you have a high like this and then another high, and then you have kind of another high going down, another high going down, you draw a line, that's kind of divergence. Same with the sort of buy one, when you have it come down and essentially they align, where there's a divergence in the highs and lows. It's kind of hard to show without like visually showing it. But for me, divergence is just straight buns. I think it's, not that good in my experience of using it. It happens rarely. When it does happen, it doesn't always lead to, a good trade. And I don't think it's kind of the main thing that your strategy could consist of. Now, sure, if you want to use it as kind of an added confluence to the side of your main strategy, that's absolutely fine. But I'm thinking here, you can only trade this strategy. Like, you cannot trade anything else. You can only trade it. For me, it's straight buns. I don't think it's a good strategy to purely trade. As a confluence, it's not bad, but purely as a strategy, I don't think it's good at all. Now, the next one here is indicators. So this is anything like RSI, MACD, things like that, the little things that traders will have at the bottom of their charts. I'm going to put it in it's okay, but you won't retire. It's okay. Again, as a confluence, it's not bad. RSI, divergence, for example, or looking at the MACD, those do work and they're good. But if I was purely trading that, I don't think you're going to have tons of success with it. And a lot of these indicators, the main issue with them is they're delayed, in the sense that they will happen slower than the market moving. So by the time the market's made the move, your indicator hasn't reacted to it yet, and so you're behind, and so that can cause problems. So as kind of like a confluence, it's good. It works, obviously. But I don't think it's something you could purely trade. It's okay. The next one is moving averages. Again, I'm gonna put them in it's okay. I'm not gonna put it above the indicators like the MACD and the RSI. The reason why I would put moving averages there is, again, they're good as confluences, but again, they're delayed. They're behind current price. So you'll find so much of the time that price will have already done the move before it shows on the moving average. But overall, it's kind of like a confluence, a 200 EMA or SMA. I can't remember what one's what, but a 200 or a 51 for that isn't that bad. Like it can be good confluences, but again, I'm thinking purely trading as a strategy, and you know, not being able to trade anything else. I don't think it's that good. So next is trend lines. So trading trend lines. This is going to surprise a lot of people, but I'm going to put it in it's solid and it works and it makes money. You'd be amazed how many institutional traders and banks use trend lines. Genuinely, you would be amazed. Like, trend lines are great for, you know, in a trending market. Now, yes, they're not always the most reliable, but if you're using them on a high time frame and you could only trade trend lines, they're a pretty safe bet that if price comes back and doesn't break the trend line, i.e. the low in an uptrend, chances are it is going to buy. So I don't think it's that bad. I think they're solid, they work, they do make money. And there's some very good traders out there, both institutional and retail, that do make money from trend lines. And it's not the worst strategy I've ever used. So I think it's all right. I think it's all right. Now, ICT, this is obviously a bit more of a controversial one. I'm between two right now, between straight buns or I would find something else. And I think I'm leaning more towards I would find something else. I don't think it's straight buns because the stuff that he teaches and the stuff that's out there is useful to know in micro doses, shall we say, but purely trading ICT I don't think is a good idea. I think there's elements that can be useful for your trading or can help, but as an overall strategy, I would find something else. I did myself. I wasted 2 years on it, as you know from previous videos. I don't think it's going to retire you. I don't think it's that good. So I would find something else. Next is support resistance. I think I'm going to put it actually to the top of it's solid, it works, it makes money. Again, support resistance is so overlooked and it's one of the first things you're taught in trading, and so many people get it wrong or don't think it's that good. But genuinely, again, the amount of institutional traders that I've met or I've seen that trade support and resistance is insane. There's so many. And on a high time frame, again, I'm not talking like the 5 minute, the 10 minute, but on a high time frame, like the 4 hour, the hour, the daily, support and resistance can be so good as a strategy. You can trade breaks and retests, so you can get market reversals. You can trade, you know, current moving trends. You can kind of trade any market condition with support and resistance, and it works. It does work. It's a good strategy to use. And I think it's severely underrated and overlooked in the realm of Forex. Now, this one down here is the Fibonacci retracement. So the 0.61, the 0.5, the 0.761, golden zone, all of those strategies that come with it. I'm going to put it in Kaching. I think it, you know, is such a good tool. It works so well in trending markets. It gives you great entries if it pulls back to the certain area, very little drawdown. If the market's trending, chances are it's, you know, going to come into the fib and give you an opportunity to get a good entry. You can cut losses easy because you know if it rejects the fib or doesn't close on it, it's probably not going to work. There's so many good things about the fib strategies, and for me, it's an absolute, you know, money machine. I love them. I think they're the best thing you can use in trading. Candlestick patterns is just straight buns. I'm putting it straight there. Candlestick patterns on their own, I think, are terrible, whether that be things like, you know, the rising stars, the hammers, you know, any variation of that, but also like the cup and handle or the head and shoulders, like these random patterns. Sure, they'll work sometimes, but as a strategy, it's really, really bad. It's just straight buns. I would never ever trade just candlestick patterns. Again, could you add it as a confluence into your trading strategy? Absolutely. But again, as I keep saying, we're talking purely only trading this. What would it be? And candlestick patterns to me are straight buns. So the next one is kind of a strategy. You could trade this just as a strategy. A lot of people don't, they just add it as a confluence, but I was thinking of it as a strategy. And I'm going to go market structure here, and I'm going to put market structure in Kaching as well. Again, market structure, and I stress this so much in my videos, but market structure is so underrated and so good, because if you get the movement of the market right, it does not matter where you enter per se, as long as it's not like as long as you're not selling in a discount or vice versa for a buy, you're gonna be right if you get the structure right. If you're breaking to the upside, and you have been, it's going to probably keep buying. And guess what? If it breaks to the downside and you lose the buy, you can sell, because you now are starting to see a change in structure, and then you can trade it all the way down as it comes up, comes down, comes up, comes down. It's just so good. I don't think it's as good as fibs, just based off the fact that you can't get as good of an entry as you can with fibs. But market structure is just the bread and butter. And obviously there's no holy grail in Forex, but if you're looking for one that's close to it, market structure I think gets there. Now, lastly is order blocks with breaks of structure, but order blocks overall. I'm actually going to put order blocks in the top of it's solid, it works, it makes money. I think order blocks are really good. I traded them a lot in the past. They work well, especially on higher time frames, and you combine that with, you know, breaks of structure. They're really, really good. They exist for a reason, you know, with how institutions move money around the market. They're very, very good to use. I don't use them as much anymore, but I've always had a soft spot for order blocks. I think they're pretty decent. So I'm pretty happy with that list. I think that kind of is what I would put everything at. Yeah, I think I'm pretty happy with that. But again, let me know what you think, if there's anything you would change. If you enjoyed that video, let me know what you think. As I said, this is not an insult to anyone's strategy, just my personal opinion. But let me know what you think, and I will see you in the next one.